So guys, we're just going to have a quick review in the Euro USD. From the weekly time frame last week, I called our attention to how price respected this open close price in the weekly time frame. And when we drop down to the daily time frame, we identified that we had the bearish order block that sponsored this bearish movement to the downside, and we had a down close candle for the previous week. And this is the rejection block from the weekly time frame, because this gave us the lowest low points. We can see we have this long wick to the downside that swept this previous weekly candle low and sponsored this bullish movement to the upside. So in reference to the daily time frame bullish order block, I told us to expect more bearish movement to the downside. Also looking at how price mitigated this open close price in the weekly time frame and gave us a down close previous week. So back to the daily time frame now, what we can see is in confluence to the open close price identified from the weekly time frame, we can clearly see we have this bearish order block, because we can see this is the last up close candle before the bearish movement, this bearish impulsive movement that's further sponsored the break of this low point. So we have the break of structure here to the downside. So we can see price broke structure. This is our valid high point. We have the lower high points here. Price gave us this lower low points and now sponsored the movement further to the downside, creating a new lower low points. So what we can see is that these high points are all inducements liquidity points. They are our buy side liquidity, because what actually sponsored the break of the structure is the movement from this lower high point after price took out liquidity here. And now we can see price return to this bearish order block that gave us the most recent impulsive movements to the downside before this impulsive movement that broke this low points. And now we can see upon the reaction of price at the bearish order block, we can see we had this bearish movement to the downside. So last week, clearly we identified this bearish breaker block, which I called our attention to. So let's change the color to that and possibly increase the size. So we had this daily bearish breaker, and I told us we could see the possibility of price giving us a pullback into this candle, which is in confluence to this daily breaker, and we have the continuation to the downside. In reference, I called our attention to wait to see the reaction of price at this daily bullish order block before we can now frame for the bearish continuation. So basically, I told us to anticipate a buy move from this daily bullish order block to the upside, and then we could frame more bearish continuation to the downside, looking at price possibly violating the weekly rejection block and taking out the sell side liquidity, since we are in a bearish market structure to the downside. So clearly now we went to the 4-hour time frame last week, and what we saw was this price condition, and then I called our attention to how the market was reacting at this 4-hour key level. I called our attention to the key level here from the 4-hour time frame, how price was reacting at that, and then I told us that the reaction of price there could sponsor bullish movement to mitigate this bearish order block, and then we have the bearish continuation to the downside into the daily bullish order block. So now we drop to the 1-hour time frame, and what we clearly saw from the 1-hour time frame in reference to the zone I was calling out was to see how price would return to this fair value gap, and we have this bearish order block, and then we can now frame the bearish movement of price to the downside. If you can remember clearly, I made this annotation, wanted to see this movement, and then we have the bearish movement to the downside. So this was the call I made for the focus and posted that on Saturday. And clearly we can see when price opened on Monday, we didn't really have that movement to the upside to mitigate the bearish order block and fill up the fair value gap. All we saw was impulse to the downside. So now let's do away with this, and then we're going to play price to see the delivery on Monday, because it was after the sell movement that I begin to tell us to expect bullish movements. I posted that in the free Telegram channel, but what happened was price did not return to our entry level to activate us in the bull movement to the upside. So let's do away with this line so that we don't really have a choppy charts in the chart here. So let's go to the 15-minute time frame. So here in the 15-minute time frame, you can clearly remember that I didn't really drop to the 15-minute time frame last week to show us anything. The time frame I dropped to was the 1 hour time frame, but I just want to make reference to something here in the 15-minute time frame. So basically what you're seeing here is the session indicator that shows us the Asia session, the London session, and the New York session, which basically are some of the techniques I use in executing trade entries. So now let's go back to the 1 hour time frame and play price to see what happened and then how I began to frame the buy move to the upside. So let's play price to see. So we can clearly see what happened. This was the bearish impulse that just occurred. And we can clearly see the bearish impulse violated the daily order block, the daily bullish order block. So let's do away with that. So what I now clearly identify from the 4 hour time frame was this. Let's go to the 4 hour time frame. So in the 4 hour time frame, when I saw this impulse to the downside, and then I went to the 15-minute time frame and clearly started seeing this delivery of price during the Asia session. So I came during the London session. Let's play price to that period when I came into the chart. So we're still in the Asia session. Now, this was when the anticipation for the London session was now made open and available for me to consider when to take trade entry. So basically you can see reference to the Asia session high and the Asia session low. What I did was to go to the 4 hour time frame, and clearly in the 4 hour time frame I marked out this open close price, and basically this is actually the bullish order block. This is the last down close candle before this bullish movement to the upside. And what we can see is I identify how price took out this sell side liquidity here in the 4 hour time frame. That was what I identified when I started looking at trading the London session. So I saw price took out this sell side liquidity, and now price returned to the bullish order block that sponsored this entire bullish movement, that in turn took out this buy side liquidity. So we can see how price went to the upside. We had this pullback, further push again. Price took out all the sell side liquidity and took out the engineering sell side liquidity, and we can clearly see price now mitigated this bullish order block from the 4 hour time frame. So why we missed that entry was because from the 15-minute time frame, let's get back to the 15-minute time frame. What I was anticipating was to see how price was going to sweep the Asia session low points, and then we have the bullish push of price. Because what I said and made note of in the free Telegram community where I posted the setup was to see how price is going to return and fill up this fair value gap. So we place our long position at this price level, looking forward to see how price is going to push to the upside into the fair value gap zone. So this was how I particularly shared the setup in the free Telegram community. So let's play price to see what happened. So what we can see is price return, but then did not activate us, and then price took off. So I didn't really return to the chart to start redefining more entry zones to post in the free Telegram community. But what clearly I saw was this. Let's play price further to see what happened. So we can see now price just kept pushing. So this was what happened. Now, if you were on the chart and then you saw price failing to return to the entry to activate you into the trade, clearly this was what you would have identified. Now, price took out the Asia session high point, and we have volume closed above that. So where is the sponsorship candle that sponsored the bullish movement that took out the Asia session high point? Since we're expecting bullish movement of price to the upside, clearly you can see this is the bullish order block that sponsored that movement. We have our bullish order block here. So, and what you can see is we have the sell side liquidity. This is the draw on liquidity. The next draw on liquidity, if prices return into the downside to mitigate the order block that sponsored price movement to the upside that took out the Asia session high points. So clearly this is it. You could just set your long position at this bullish order block, your stop loss below that, and we look forward to the fair value gap. In extension from the 4-hour time frame, this was the zone I was clearly anticipating to see the buy movement with journey into. This bearish order block from the 4-hour time frame. Clearly this bearish order block here. Because you can see also is the last sponsorship zone that sponsored this bearish movement that mitigated the daily bearish breaker block. So let's do away with this so that we don't have so many lines on the chart. Let's also do away with this, and let's do away with this since we can clearly see price did not return to this level. Price just respected the ideal bullish order block, the last down close candle before the bullish movement, and we can see price filled up this fair value gap. You know what we have is we have the push of price here, price fell, price took out this bearish order block, so we have what's changing state of delivery here to now bullish. So we can see price return to that zone that gave us the change in state of delivery. So now clearly this is now in extension the ideal profit target area in a long-term perspective. You get it, guys? So let's go back to the 15-minute time frame, which is basically the time frame I mostly frame the entries for us to anticipate to take our entries. So let's clearly move this so that we get triggered. So this is it, and we have that locked. So clearly now what we can see is the London session failed to take out the Asia session low point that I was anticipating. But what we can see is that price gave us impulse and took out the high points, and volume closed above that. So now we can see now we are in the New York session. So let's play price to see what happened. Now we can see price return activated the trade. So you see, you wouldn't have missed out in this. And now you can see the impulse to the upside. So that was what happened in the market, guys. So let's further play price to see what happened. So we can see now what happened next was price returned back into this breaker block. So, you know, in the mentorship, I've been teaching you guys that breaker blocks are also sponsorship zone to consider in the markets. So we can see price return to this breaker block zone. If you wanted to take another trade setup, you would have looked forward to this breaker block zone and anticipate to see how price would react before you now further continue bullish to the upside. And what we can see, price have mitigated that. We have this high point. So let's play price to see what happened next. So we can see how price is just consolidating around the breaker block zone, because this is a breaker block. The last up close candle that sponsored the bearish move that took out inducement liquidity. So let's play price to see. So let's identify the new day so that we don't miss that when we get into a new day. So let me actually mark that out so that we know when we're in a new day. So this is our new day. Let's also mark out the next new day. So we have coming, sorry guys. All right, so we have our next new day. So let's log this. So this is basically what happened on Monday. So we can see how price is reacting at this breaker block zone. So let's play price to see. So what you can now see here is price respected the breaker block. And now we can see here now price broke structure, broke this high point. So we have a break of structure to the upside, clearly within our 15-minute time frame. So we have that break of structure. So what I identify again was if price is going to continue the next day bullish, then I need to identify the draw on liquidity within this leg movement. So that was when I went to the 1-hour time frame. And what we can see from the 1-hour time frame is we have this fair value gap left below here. This is where we have this fair value gap. And now what we can clearly see now is that price created this fair value gap. So basically, if price is returned, we want to see price mitigate this fair value gap and the possibility of price dipping more lower to this bullish order block. That was my zone I was now anticipating. If price is going to go further downward and violate the breaker block from the 15-minute time frame that price respected, guys. But then let's play price to now and see. I allowed the new day to begin before now identifying how to take the bullish continuation. So let's play price to see. So we can clearly see now we are in a new day because this is when the Asia session started. So my anticipation in the Asia session is to see how the Asia session would dip, and then by 12 a.m. New York time zone, which is going to begin the London session, we look forward to how we could now continue bullish to the upside. So what I saw was this. Now, that is why I told the mentorship students in one of the sessions that within your structure, you're going to find internal structures. So what we can see is when price mitigated this breaker block zone, we had the fall to the downside. Price gave us this push to the upside. So let's do away with this, guys. Let's do it with this. So we had the fall to the downside. We had this push. Price fell. What you can clearly see is that price swept liquidity here. We have the sweep of liquidity. And clearly we can now see again here, we have this market structure shift here because we can see volume closed above that. So clearly now, basically it means we have liquidity here and we have this liquidity because this zone swept liquidity. So basically, where's the last down close candle before the bullish move? This is the last down close candle. You get it, guys? So this is the last down close candle. So let's do it with this. So my anticipation was if the Asia session is going to drop to the downside, then I'll be looking at this zone. You get it, guys? I'll be looking at this zone. But then, you know, I do not trade the Asia session. So I allow the Asia session to just deliver to the downside. So let's play price to see. So now what we can see is the Asia session dropped to the downside, mitigated this zone. And now we can see what bullish reaction to the upside. So the truth is I didn't even take an entry here on Tuesday because this is the beginning of a new day. Because I think the price movement just went up without really giving me a structural consideration. You get it, guys? So let's just play price to see what happened. So let's see. So this is today's price delivery. So I didn't really take a position during the London session, guys. But what I clearly identified was, you know, the fall of price to the downside. We have the Asia session high points and the Asia session low points. But basically, I made more reference to the pullback that happened during the Asia session. And this is the high of that pullback. This is the high. So basically now, I anticipated to see how price is going to react at this high point that price created, this pullback. Because now we have the fall, the pullback, the fall, all during the Asia session. And now we can see London session gave us bullish movements. Since I'm anticipating bullish continuation, then I need to identify the sponsorship zones, you get. So this is a swing high point that price broke through. Are we together? And you know, clearly this is going to act more of the breaker zone because it sponsored the gap of this sell side liquidity. So I think I went to the 30-minute time frame, if I'm not lying. Then I clearly now, so this is the up close candle. So you can see I marked that from the 15-minute, but you can clearly see it now in the 30 minutes. The up close candle that sponsored this bearish movement to the downside that took out those sell side liquidities were identified from the 15-minute time frame. And in confluence, you can see what we have is the fair value gap. So once you've established a directional bias, you've established what you're expecting to see for that week and for that day, you just stay in your entry time frame and begin to look at how price is delivering. Clearly, that is just it. So basically, it means if we're going to have a pullback to the downside, because you can see here, this is the open price at 12 a.m. Price went to the downside, mitigated the zone identified, and now we have the bullish movements. Price trading above the 12 a.m. open price. We're together, right? So now I expected to see a pullback. So clearly now, this was the long entry at this fair value gap in confluence to this bearish order block that was violated to the upside. So this was my entry. Stop loss was below here this week, and then the 4-hour order block was the reference point for the target price. So let's play price to see what happened clearly.